All right. Hello, traders. Mark here, Mark P Markets. Thanks for joining me for another Greenbridge Investing market update. Okay, we're going to look at some price action today, again, to update where we were from earlier in the week. Thanks for joining me. If you're new to the chat, make sure you put your symbol, like your market, your stock, your coin, whatever it is, put it in the chat now. So once I complete my portion of the analysis, I can take a look at your symbol. Okay, if it's an altcoin, please make sure to put USD after it so that I don't look at the wrong symbol for 3 hours. Okay, cool. All right, just adjusting my microphone. Hey everyone, Jesse, good to see you. And Wedge and Tillin, good to see you. Cool. So thanks for putting your questions. We'll get to those. All right, so let's get this thing started. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, now let me get my chart up. Yeah, so we're going to talk about all that stuff, right? Bitcoin is obviously reacting to the stock market, sharp bounce in the stock market. But here's the thing. A lot of people suffer from the fear of missing out. So if they see something like this, and, oh, this is the next big thing, right? And then you're going to see on top of that, you're going to see a lot of hype and a lot of nonsense that come along with something like this, right? So who cares that it's up 4%? It doesn't really matter. What you should be looking at is the location, okay? This is what matters, not that it's up 4%. So again, I'm glad you mentioned that because that's really a mindset, right? And most people come into this game with an ineffective mindset. And the ineffective mindset is chasing money. When you chase money, you invite fear. And when you trade with fear, whether that's the fear of missing out or fear of losing, because that's really those are the most powerful motivators for the herd, you're going to act like everyone else. And you're going to miss the real opportunities as a result. And you're going to get mixed up with average opportunities that don't really pay off well. Now, there's nothing wrong with average opportunities. The problem is when you pile on the layer of emotions, you're likely to make ineffective decisions, and when things go against you, you're going to hope, and that's going to open up the possibility of losing a large amount of money. And when things are going your way, you're likely to take profits sooner because you've gotten beaten up, right? And if you haven't gotten beaten up yet, you will get beaten up. That's just part of the game. So anyway, that's the first thing that you have to realize. Now, let's get a little more technical here. Keep in mind, charts are a small part of this game. I see so many fake gurus here on YouTube, and what do? They emphasize this 1 minute chart this oscillator that. When this moving average does this, you do that. Right, that's nice. But the outcome of all of that is random. There's no advantage to applying any of those strategies. I've come across countless strategies that are free on YouTube. Do they work? Yes, randomly. So random doesn't really help us, okay? You might as well go to a casino because, again, when you pile on the layer of emotion, you're not going to win, right? There's no way to win. There's no way to get around that, especially when you add the costs that are involved. So let's talk about this Bitcoin situation. Yeah, so we have this powerful candle, right? That's a buy signal. But here's what you need to recognize about it. First, so the signal was at, what's this high here? 46.041. So basically, once it cleared 46, right? This thing is at 46.725. So if you buy this thing now, and this is going to reflect across all the garbage altcoins, we're going to take a look at them. You're going to see a similar thing, right? We do have a higher low. So this is a bullish sign. We have a higher low established. Okay, it has not gone back to the support that I was hoping for. But hey, Bitcoin doesn't listen to me. So we have the higher low. Now the question is, can this go for the higher high? Again, the location is what matters here, not the chart pattern. This location is a tough spot. So if it's a tough spot, my next question is, what is the risk that I have to take? And is it acceptable? So if you look at the low of this higher low, what is that, 43,935? So let's just say 43, let's make that 43,500, okay? we have to round it lower, because if you put your stop right at the low of that candle, you're probably going to get stopped out. So you have to give a little room, right? So let's just say 43,500 is where you define your risk from. And you're buying this thing right now at basically almost 47. So you're looking at what, 3,300 points of risk, something like that. That's not horrible for Bitcoin. I mean, you know, if you're taking, we've had trades where we've taken 4,000 or 5,000 points of risk, okay? But the reward potential is really what should determine if this is a worthwhile trade or not. Again, I'm talking about swing trades here. Some people, I get the impression that some people don't know what a swing trade is, or they think that an investment and a swing trade are the same thing. They're not, okay? In terms of risk, they're not even close. So in terms of a swing trade, you're looking at about 3,500 points. Let's just round it to 3,500 points of risk. What is the reward potential if it can clear this resistance? Well, if I'm risking 3,500 points, I need to make at least that to make this trade worthwhile. What are the chances? Well, what's this? Let's start looking at some resistance levels, some clear ones based on some of this previous price action, right? So you have one right there, which it basically reacted off of, okay, and it's on its way back up there again. Okay, fine, but what if it turns into a red candle up here again? All right, so that's one tough spot. Then you have this spot up here. So what is this price up here? 52.9, so 53. So if you're buying this thing at basically 47 and it can reach 53, then you've justified your risk. You're over 1-to-1 at that point, which is acceptable, okay? But can it get through this resistance zone? There's no way to know if it can do it or not. So you have to be willing to take the chance that it breaks through. So, and that's fine, right? Bitcoin's going to do whatever it's going to do. I don't like the location, so this is not a trade for me. But that doesn't mean it's not a trade for you. Maybe you're aggressive and you're willing to give it that chance. Okay, no problem. I mean, the structure is bullish. Theoretically, it should make the higher high. But because of this structure in the way, and it's a tough spot because the 50K area was a pretty heavy-duty support, so I'm expecting a heavy-duty resistance. The way to play this game is if it struggles up in here and you're in it from this price or maybe slightly lower, and it gives you a bearish pin bar in this area, you should probably get out. You shouldn't need to talk to me to tell you something like that. If it gets there and gives you the red candle, that means it's faking out. And if it's faking out, that's risky, right? Because now it could pull back to 40K at that point if it fakes out, which there's a good chance it can. So, and this is where things can get tricky. And you see this a lot with the altcoins. It may pop up a bit, fake out a little bit, and then next candle, green, and go higher, right? And I've seen that many, many times where you get that little red candle, and that's where second guessing comes in. There's no way around that. There's no technical way to get around that. It's either you have your stop in place, and if you see the red candle, you sit back and hope for the best, or you see the red candle, you get out, or maybe reduce your position, and if the next candle turns green and breaks out, you have to buy it back in. So it requires a lot of babysitting, even on the swing trade time frame, which is why I don't like those type of trades, because I can't sit there and watch this thing 24 hours a day. So, you know, if you're looking at day trades, it's a different story. Plenty of opportunities to do things on the day trade time frame. But the thing is, if you're new and you've been doing this, you know, a few months, whatever, less than a year, you should not be day trading, especially these things, because there's a lot of leverage involved, and trust me, you will lose most of your money when I say that, all right? Because day trading these things, what makes it hard is the constant changes and the great deal of noise and the random nature of the market. You have to be able to see through that, and that is not easy to do, especially when you put in inexperience and a layer of emotions. Imagine someone with experience who can see through that stuff still has to deal with the emotions. So that's why, you know, I tell beginners, stay away from that time frame, smaller time frames. And most of these fakes on YouTube, a lot of them, what do you think they're focusing on? Oh, I'm going to show you how to day trade Bitcoin and make thousands of dollars in minutes. Right. Okay, so that's the wrong place to be looking. Anyway, all right, so that's enough of that stuff. That's the Bitcoin situation. There is a buy signal. The risk is about 3,000, 3,500 points, and you need to justify that. This thing needs to go beyond 50K. And I'm telling you right now, like I said, if it fails somewhere in between, that's where you have to make a choice. Like I said, you either get out, you just hope it goes to, you have your stop in place and you just let the market do its thing, or you have to make some other kind of adjustment, and it's hard to do. And also, because of this location, you should, if you take a trade like this, you should probably size it a little more conservatively. So instead of risking 1% or 2%, maybe 0.5% because of the location. So again, everyone's focused on this. They see the 4%, they see the higher low, they see all these great things, they turn on the news, and all they see is hype and celebration and this and that, and everyone ignores this, the resistance that's right in your face, okay? So that's my point with Bitcoin. All right, let's move on to the stock market real quick, because again, same type of situation here. So the stock market, this is the NASDAQ 100, it pulled back to this support. I've been talking about these supports, right? I even put it in the chat yesterday or the day before. I said if it clears the 14.9, then you have 14.850, and then you have 14.7. It touched the 14.7s overnight pretty quickly, right? Earlier today, like around 7 or 8 a.m., this thing was at 750. And look at it now. Back to 967. What a crazy day for the NASDAQ. That's a pretty wild move. Now, that's going to get a lot of people excited. It's going to lure a lot of the, typical buy the pullback type of people. Great for day trades, all right? But when it comes to the bigger picture, nothing has changed. You say, how can nothing have changed? I mean, this thing's up, so much off the low. It's like 200 points, 300 points off the low or whatever, about 250 points. Nothing has changed. This is just a low volume environment and just reactive, low volume type of trading. That's what it is. So what do you do here? Is this a buy signal? This is going to be good for some stocks. Perhaps you go for a swing trade, just like on the show yesterday. We talked about there are a couple of stocks here and there. I sent out Bumble, BMBL, earlier today. And did Bumble go off? Let's see. 52.33 was the high. It actually, the buy stop was at 52. And look how this thing closed, 49. I mean, that's what you're dealing with. So that thing faked out. That's not good. That trade is now active, and it's red. So that's a risk that you have to take in this environment. Now, is it going to go straight to the stop? I don't know. It's possible, but you do have the higher low, and you need this market to continue this party. Otherwise, this thing is probably going to go right to the stop. I probably should have put that buy stop a little higher, but I put it at 52, and yeah, today's high, 52.33. Yeah, man. I was thinking about putting it at like 52.50 or something like that, just in case this would fake out. But when I looked at it earlier, it was a lot lower. So I figured I probably won't even get to the buy stop today. But anyway, that's the kind of risk that you take. All right, let's take a look at. So like my point is, there are going to be a bunch of stocks. Now we had some questions in our chat. mRNA was a question that people were asking about, and so recently, look, you have a nice bullish structure here. Now, this is not driven by the S&P. This is news-driven, event-driven. It does its own thing. So you could work more with the chart. The levels will probably be more reliable because it's not being affected as much by the S&P. So you have something like this, right, on mRNA, Moderna, and you have your support right there. What is that? 358. So you figure you can round that to about 350, and that's where you're looking for support. Anything in between that, unless you're putting on day trades, anything between that, you're just playing with noise, okay? If it breaks that support, it's probably going to go lower. That's it. It's that simple. So you have to use that point of reference to define your risk, and there's really nothing to do in this thing right now, right? I wouldn't go near this, not with this candle. It broke yesterday's low. It's this inside bar type of candle, right? Indecisive doji. It can go either way. Maybe it breaks support, maybe it turns here, but there's nothing to do right there. On top of that, you're fighting this lower high that's now in place, right? So yeah, it's a lower high, but in the context of a broad bullish trend. So I wouldn't I wouldn't sit there and call this the beginning of a bearish trend. I would just be looking for that support to possibly be tested again, and I would be looking for buying activity and for this broader trend to continue until it proves otherwise. All right, meaning it tries to go higher, can't break this high, and then you have a new structure developing. All right, so that's those two I had questions about. Let me jump over to gold real quick, and then I'm going to start answering your questions in the chat. So thanks again for sharing those questions. Let's take a look at gold. So like I said, and again, we talked about this on the show yesterday. For those of you that don't know, I'm talking about the Talking Market show. Andrew and myself, we were, you can see the stream on this channel. You can just go back and rewatch it or whatever. And he covered a bunch of stocks that were of interest, right? And that's where we got Bumble from, but you know, for trade of the week. But we also talked about the gold and the dollar and all this and all that. Gold is a highly opinionated type of instrument. So there's all types of stuff. When you're not sure, don't go and grasp for the experts because they don't know anything. That's the way you have to look at it. Now, do I know more than the experts? No, I'm not saying I know more than the experts because I don't. No one knows anything. That's the way you have to look at this, right? The only thing that knows everything is the market. So the market's going to provide reality, and we need to be able to extract what that is and interpret. And one simple way, besides looking at the trend and the structure, you're looking at levels. I talked about this yesterday on the show because Andrew was saying, oh yeah, I think gold is a long. But I said, not at this price. It's not a long. Look what you're facing. That resistance was right in your face. Why would you buy right into that, especially after a leg up like this? Again, people focus on the leg up. People focus on the wrong information. You have to look at what's ahead of you. So now we have this outside bar, right? Is that an outside bar? Just about. That's technically a sell signal. If I was one that was open to shorting gold, which I'm not, that would be an opportunity to short gold. But gold, you know, is generally in a bullish time. This thing is consolidating. Now, I just finished saying, you know, it's a highly opinionated instrument. Do I have an opinion? Yeah, I do have an opinion, but I'm not going to trade on that opinion. I'd rather not trade on it, meaning I believe gold is generally bullish, so I'm not going to short it, right? That's how the opinion is really affecting my decision making. Now, if I had time to watch this thing all day and I could day trade it, then that's a different story. I would be open to shorting something like this, but I can't watch this thing, and this thing can easily turn around at any point. What I would be looking for as far as a swing trade is a higher low, and that higher low is likely to develop right there in this area, okay? A lot of buying activity in this area right there. So that is what, the 750 level? And right now we are at 1776, okay? So that's the place to be anticipating the buying activity. So if price can get there, that would get my attention, first of all. Second of all, if I can get the reversal that I want to see and I can measure my risk clearly, then I have a possible trade idea. That can take days. So we'll see, right? I check the gold chart every day, and it's either at a place where I like it and it's giving me something to work with, or it's not. So like I said, now if this was a Forex pair, I would be open to shorting something like this, okay? I mean, I guess you can kind of consider it a Forex pair since it trades against the dollar, but gold has its own variables, and gold is obviously sensitive to any type of dollar and inflation news. Now let's go back to the bond market. I bring this up a lot. A lot of people don't understand the relevance of the bonds, why they're so important as far as the bigger picture goes. Again, this is not something you can trade on right now, but it gives you some sort of context. Now, the bond market, right, has this little rally, this little move upward, and this thing, what does that imply? This little move upward for the moment implies lower interest rates. Interest rates are the key to the whole thing. So wherever interest rates are going, the market is going to do the opposite, right? Because no one wants higher interest rates. It's bad for everyone, except for banks. So let's take a look at this thing on the weekly chart. This is really what you have to keep in mind. So the bonds are in an indecisive area. I've talked about this again. I'm just reiterating it. Nothing really has changed. The lower high is established from 2 weeks ago. We have this little bounce attempt, which isn't going very far. So if that bounce attempt that you're seeing there right now fails, which this can turn into a lower high, then it resumes the rising rate environment. Now, I'm not going to sit here and talk about economics, but rising rates are bad. And if the institutions know that rising rates are coming because they have better information than everyone else, and who trades bonds? Not little retail traders. So if they know something and they start moving their money in one particular way, meaning rising rates, then that's going to affect the market. That's why I'm so cautious with the S&P and NASDAQ at these levels, right? I showed you the S&P yesterday, right? We talked about the S&P if you look at the weekly chart, and this is ridiculous. This type of rate of change is ridiculous, but it's a result of stimulus, right? And all the government stuff that's been going on and all the other hype and all the other nonsense. But typically that's stimulus and inflation. That's typically what that is. Now, when that pulls back, there's a lot of room to pull back. That's why I'm so cautious over the long term, and I have no interest in long-term positions or investing or anything at these levels. You have to be mindless to think that the stock market is safe at such levels. Now, I know I may sound a little dramatic, but the thing is, I'm looking at reward risk, and the risk for longs is extremely high. Now, shorting, we've tried a few shorts. Like I said, it's been tough, very tough to short this type of market. At some point, it will pull back, like earlier today. It got everyone excited, and then it turns around. So the volume and the catalyst is just not there yet. All we have is the potential. So it's a tough game to play. All right, so I'm going to leave you with that part. And I want to get to your questions because I'm gonna go till like 4 o'clock today. All right, I'm gonna just cut it a little shorter than usual. So let's get to your questions. Those are the main things I wanted to cover. Let me know if you have any more questions about those. So hey Jesse, it's good to see you. I saw you said hi the other day, and then I missed your I didn't get to say hi back. All right, so thanks for joining me. You want to see oats, ZOZ 2021. Okay, so oat futures. So something like oats is obviously going to be affected by inflation, right, and that type of stuff. So the chart, like you said, is generally strong, pulling back a bit. You have a bullish pin bar today. The question is, what kind of trade are you looking for in oats? For a day trade, you have this is showing signs of buying for tomorrow. You have a bullish pin bar today. The thing is the location. This is a tough spot, right? For a swing trade, it's a tough spot because it's such a tight pullback. You have a support right here. This would be a better area for a swing trade. So what is that? 467 even, 4674, right? 467.4, right? That area right there. That would be more ideal for a swing trade because you have an old resistance which is likely to act as a new support. So your probability is better there. Here, yeah, you have the pin bar, but it's tight, and this thing can easily fool around and work its way to that level. So you mentioned you're afraid of the dollar, or you're concerned about the dollar, and yeah, that's a good concern because the dollar. Look at this, right? Dollar breakout. Look at that, and the bonds haven't even reacted, right? The bonds have barely moved relative to this. This right here is a reflection of a rising rate environment, strengthening dollar. We talked about this on the show yesterday too. We should have sent out short pound. We even talked about it. We mentioned short the pound, but instead of sending that, we sent out Bumble. That was my idea. What am I going to do? So you have this breakout on the dollar. Wow. So yeah, in that situation, Jesse, I would definitely hold off on the oat trade and wait for that pullback because you need the dollar here. The dollar at this point, like if I was long the dollar, there would be no reason to get out of that trade. It's vertical, right? So you have to let this thing run until it finds at least a selling candle or something. There's just nothing to do here. So if that's the case, that means even though there's a pin bar on oats, if this dollar pushes higher overnight, you're going to see oats lower tomorrow. So watch that support that I talked about. That's the place to start looking for buying activity. And at that point, the dollar should be showing some sort of bearish reversal pattern, kind of like this, right? Doesn't mean it's going to go into a bear trend, but that little pullback, right? A little pullback like this can give you something, but you have to keep your expectations very conservative in something like that, because again, if the dollar is going to continue, let's just take a look at the dollar on a weekly. Look at this. That's a pretty serious breakout, right? That's a pretty serious resistance breakout. So if that's the beginning of a new trend for the dollar, because these things don't just turn around, you know, like an altcoin. This is the dollar. So if this trend is going to persist, it can persist for months, especially if the Fed starts changing their talk and starts getting more hawkish about rates and their rate schedule and all that other nonsense. This thing can start working its way higher, and you're going to see pressure on things like the oats and all that other stuff, because naturally that's what's going to happen, right? So just something to keep an eye on there. So if you go for that trade idea that I mentioned at that support, you have to be real quick to get out if it breaks that support, because that means the dollar is probably going to trend higher. All right, and this breakout could be the beginning of it. All right, so thanks for asking about that. Let's move along here. Wedge, good to see you. And Tillin, was this pullback on BTC we've been waiting for? Yeah. So as far as the pullback on Bitcoin, it's not exactly. I was looking for more of a steeper pullback. Usually I'm looking for a steeper pullback. And the market, like I said before, doesn't always deliver what we want, right? So that's where you have to make that adjustment in terms of risk. And like I said, so I explained all that earlier, and that's what you have to decide if that risk is acceptable, and if you have the attention span or the ability to just keep an eye on this thing to see if it fails over these next few prices. It may not fail. It may just break through. It's possible, but you have to babysit that, because, and that's why, since I can't babysit these things, you know, I'm not going to sit there. I don't want to sit there and worry. Is it going to break through? Do I have to check it every hour? Blah, 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 blah. All I know is there's a heavy resistance in front of it, and it's likely to fail. And I don't want to sit there watching it every 5 seconds and, you know, adjusting. So that's what you have to keep an eye on. So if you're willing to take that risk and you're like, I don't care, then you do have the buy signal. It's just very aggressive. So thanks for asking. Okay, so ADA, and thanks for asking about ADA, because someone else in our chat also asked about ADA, if there was a buy signal in it. Now, ADA, I talked about this in my previous stream as well, and we even took a quick look at this on the show yesterday about this higher low situation. This is what Bitcoin can do, okay? This is ADA, but here again, like I said, everyone is focused on this. This is what everyone sees, right? I show the chart, and this is all people see. I'm going to make it real big so you get the point, right? This is all people see. That's it. That's all they're looking at. They don't see anything else. Oh, yeah, this thing's higher. This thing's going to double or triple, right? Because some guru on Facebook or some guru on YouTube said ADA is going to be the next 10xer or whatever nonsense that they show on there. And meanwhile, this has not changed, okay? So if you're buying into that, you're chasing right into this resistance. You're going to buy it from someone who's very happy to reduce their risk onto you. Why would you want to be that person? All right, that's the purpose of the herd, is to basically take the risk off of people that know what they're doing because they're reacting to stuff. You don't want to be that, right? You want to be the one that gets the good prices. These are bad prices. That's the problem. It's a resistance area. Is ADA strong? Yeah, it's following Bitcoin. If Bitcoin fails at 50K, this is in a perfect location to fail, okay? I'm not being pessimistic. I'm just being realistic based on the prices. Now, you have the breakout, and you're going to have a lot of breakout traders piling into this thing. If you're aggressive and you're like, yeah, but I want it, you know, I want to take the breakout. Okay, that's a strategy. But the next question you have to ask is, well, what is the risk? Well, based on this structure, the risk is at this higher low, $1.87. This thing right now is at $2.30. So you're looking at 50 cents of risk right from the start. And if it fails, you have two choices. You either just get stopped out there and take the full loss, or, you know, this thing turns red and you just get out once the red bar closes and it looks like it's going lower, and you take the loss. The chance of losing in such a trade is very high. So if you don't like to lose, this is not a good trade to take. If you're aggressive though, and you can handle that, and you understand what that kind of risk is all about and the kind of babysitting that's involved, then, you know, there's something there because you have the breakout. But again, this is following Bitcoin. It looks a little more exaggerated, but it's following Bitcoin, all right? These altcoins, whenever Bitcoin has a move, The hype on these things is ridiculous. Just look at the side videos on your YouTube, right? How many ADA headlines do you, oh, ADA is going to be at $5 by tomorrow, right? All these ridiculous headlines. Those things affect people because you have a lot of people who don't know what they're doing. So they figure, hey, it aligns with their hope. It aligns with their emotional need to make money. So that, hey, this guy thinks it's good, I'm going to buy it. And they're all piling in here at the worst possible prices. Okay? Again, location. So your first location for attractive, if you want high probability, your first location is this low, right? Which is $1.87, somewhere around there. And if that breaks, which again, Bitcoin will have to start breaking some supports as well, you're looking at $1.78, so basically $1.80, not much lower, right, than the $1.87. It's around there. But your real support is around here, which is $1.50, right? That's a pretty solid support. That was a range high. It's an old resistance. So if it can ever get back there, that would be a very attractive place, right? But I would be assuming that Bitcoin will be doing something similar. So don't be fooled by this type of price action. Pay attention to the level, all right? And then you have to ask, is it a level worth buying, or are you willing to take that chance that it follows through? All right, so thanks for asking. Let's see what else we got here. Shervin, hey, good to see you. Andre, yes, you're perfectly right. We are on the brink of HNS anyway. Okay, see, and look, Andre, what you're saying, that's a good mindset. You have to think of, look, I have a couple of different sayings, right? Someone was making fun of me. I should put them like on a shirt and sell the shirts or whatever. I don't buy highs. Okay, I don't buy highs, and I'm very strict about that. You know, Andrew will see a chart and he'll be like, "Oh yeah, look at this chart. I like this chart." I'm like, why would you buy the high? Well, because it's strong. I don't buy highs. So it's either at a support area that I like, that I'm interested in, right? A support, a high or low of some kind. I'm much more comfortable with that, or something else. Now, there are occasional breakouts that would make sense. That's why I was okay with Bumble, because it was coming off of a high or low. That's a different story, right? That is an exception. But when something is like that, like a high like this is like a peak, and it aligns with something like this back here, I'm really not interested. So when something goes vertical or something is at a high, you're better off waiting, right? Don't buy those. Find your next support. Put like, you know, something to remind you, a reminder at that level, and if it gets back there, then you have a potential opportunity. If it doesn't get back there, then who cares, right? You go find an opportunity somewhere else. Why take the risk? Okay, so hey DJ, good to see you. Thanks for joining. Yeah, so I explained that Bumble situation. He's asking about Bumble. Yeah, I mean, this thing tapped everyone in, like I said, and I just mentioned, why was I even okay with sending this out? Because, you know, I try to filter these. I don't want to send out bad trades, you know, to our whole list of free subscribers. But what I liked was the higher low double bottom, right? And that's what I wrote about. If you read the email, I liked this, and I liked it in light of a weak S&P. Even though this is not highly correlated, S&P closed very weak yesterday, and this thing was trying to be strong. So the idea is, when you have relative strength, if the S&P reverses, or the NASDAQ like we saw today, this thing should have closed like this, right? Relative strength. But it has not produced that outcome. So it tapped everyone in, and now it's like, okay, now it's red. Now what? Well, look, we have the stop in place. Make sure you respect the stop. And that's all I can say. Or if you don't like it, if you don't like that bearish pin bar, just take the loss. I mean, the market is still open. Take the loss, the $3 loss, or whatever it is. What is this thing at right now? 48.91, so basically 49. Yeah, so you're looking at like a $2.50, $3 loss. Take the loss if you don't want to lose $6. And if it turns back around, then you can consider buying it back again at 52. But this occurs sometimes on these breakouts, and that's one of the problems with breakouts. But I was okay with this one because of the general structure and the general location. If you notice, this is not the same type of breakout as that ADA chart that I showed earlier, right? The ADA chart was like way up here touching a resistance. This is trying to break out of a higher low consolidation. So it's a different situation. All right, so hopefully you can understand that. Anyway, thanks for asking, DJ. Why not? Why not? Why not? AMP. Okay, USD pair looks like a good possibility. All right, let's take a look. AMP USD. And now, all right, so look, that looks very similar to, let me see, is there another chart on this? Let me see if I can see like a USDT maybe. Okay, yeah, there's more information on this chart, on Poloniex. So looks kind of like that Bumble situation, right? Nice, you had this push, this general push higher recently, followed by a consolidation. Okay. Now, here's my concern with this. You have the setup. These coins, typically, what I don't like about them is they're not leaders. They typically don't trade on their own, okay? It's not like a biotech stock that is more event-driven or news-driven. This thing is dependent on Bitcoin or Ethereum or whatever. And based on this here, with Bitcoin doing what it's doing, up, whatever, 4%, this thing is kind of, what's the story here? Shouldn't this thing be higher? So yeah, you have some interest there, and if you were to buy this, you don't have to take an enormous amount of risk either. What's the low over here? 55, just over 5 3/4 cents, right? That's the risk based on this, and this thing is right now, it's at 6, basically just over 6. So you're looking at about, what is that, 2.5 cents or whatever it is of risk or something. I don't even think I have that right. 0.25 cents. So that's what you're looking at there. And you need this thing to go. You have the higher low. Theoretically, it should make the higher high. But why is Bitcoin, with Bitcoin pushing like it is, shouldn't this thing be doing a little bit better? Shouldn't this thing be breaking this resistance right here? So that's, maybe it's a delayed reaction. Again, you have to be willing to take that risk and take the chance that it does something like that. Because what if Bitcoin fails off the 50K area, which is highly possible? Is this thing going to just break through that support, break below the support? You have to be prepared to exit that area and take that small loss, okay? Because this is not the best setup in the world, and you have that relative situation with Bitcoin. That's what I don't like about these things. All right, so thanks for asking about that one. I hope it helps. AMP has a very low volume, which in my opinion makes it vulnerable to individual orders. Well, okay, so low volume, maybe it's not a very active coin, but also if you mean low float, meaning there's not a lot of coins available, then low supply, then yeah, you're looking at one of those potential squeeze situations, right? If everyone piles in, the thing goes vertical. Right, like these type of moves. So if that's part of your idea, that's not a bad idea. You just understand the risk, right? If it breaks below that support, your next support is like here, right? You have a support there. What is that? I'll tell you in 1 second. That's basically 5. So it's just below 5.5 cents, something like that. And other than that, you're looking at this old resistance, right? Support area here, which is what? What is that? Basically 4 cents. So those are your levels on something like this. If it starts to break, those are your levels. But yeah, if you're going for that squeeze idea, then that makes sense. I mean, this thing is a fraction of a penny, right? Or it's basically what? You're looking at 6.5 cents or whatever, something like that. So in order to make money with something like this, any kind of decent money, you have to trade larger positions or use leverage. So that's why you really have to be on top of that risk. Because if it goes the wrong way, you don't want to get stuck in one of these things and watch $10,000 get cut into $5,000 just because this thing moves back, 30 cents or whatever. It moves back 3 cents, right? 50% or halfway, which is very possible with these garbage coins. So thanks for asking about that one. I hope that helps. So a break and close above 2.5 would be a good sign to buy. If you're talking about, ADA, I'm guessing, right? From what I was talking about earlier, ADA. Wow, look at this thing go. It's still going. This thing's at $2.36. Well, if it breaks above 2.5, right? If it breaks this resistance, that's still, again, the risk is enormous. Maybe you're joking. Maybe you're joking about that. I don't know. But the risk is enormous on something like this. Now you're buying and you're hoping that momentum can continue. Look, keep this in mind. Look where it's coming from, okay? There are people that are long from this area, and they're so happy to see it here, and they're so happy to sell it to people who don't know any better and that continue to buy it. if I was long from these lower prices, I know I can say this after the fact, and I'm not long ADA, but I probably would have gotten out of all of it somewhere in here somewhere, right, when it goes vertical like that, because that's what I do. I don't care how far these things go, right? People are always trying to top tick, or they're trying to maximize every penny, and it's just, it's hard enough to play this game and to get beyond the random nature of the market and to have some sort of consistent advantage. That's hard enough. And then you think you're going to sell the top of the market on top of that? That's a pure gamble. So that's why I don't play that game. I look to beat my reward risk, and that's it. I don't care what happens after that. So let's see, Alex, can you please look at Lena? Sure. There was Lena. I saw a headline for Luna, right? Luna the other day, and Luna was going to be the next blah blah blah, right? Because Luna, I guess, was going vertical. So of course you see the headlines on YouTube. Now, here's Lena, and yeah, so you get the move. Look, it looks very similar to that Bitcoin situation, right? It's vertical, but again, who cares about this vertical candle? If you're not in it, who cares? What you need to be caring about is what it's going into. First thing I look at is, where's the next resistance? That's the first question I ask, and it's right there. So that price is basically 7 cents. Okay, we can round that to the whole number. You're going right into that. This thing is at 640, 639. It's not that far away. You want to buy into that? So I wouldn't. I would be interested in the next support. And the next support is back in here somewhere. And it touched it, what, a couple of days ago, it touched it. But it can touch it again. And you can get like another double bottom situation. But that's the support. What price is that? Basically 4.95, you can say 5 cents, right? That's the support. So either it goes back there and offers some type of opportunity, and I would be expecting Bitcoin to also be doing some type of floundering, right? If that's what's going to turn these things around. Otherwise, they'll keep going if Bitcoin keeps going. Now, what if it keeps going? What if it breaks this resistance? I'm so cautious around these resistance areas, and yes, I miss trades as a result of that. But I don't care about missing trades because it doesn't cost me any money to miss trades. I could miss countless trades and I still have the same amount of money, right? That's what people need to realize. This is a game of playing good defense, not good offense. Now, if it breaks the resistance, then the next best thing to do, because if you buy into that break, there's a lot of it can shake you out. There's a lot of second guessing, a lot of potential for second guessing and all that kind of stuff. Let it break, let it pull back. Let it pull back to this resistance after the break. That would at least be some type of buying opportunity. Yes, aggressive, but at least you know that the resistance has been cleared at that point and it's acting as a support at that point, okay? Just like when this resistance broke, if you notice, this happens all the time, right? This resistance eventually broke. If you had just waited a few days, like 5, you got the bullish pin bar off of it, right? And that's what led to where you are now. Would I have taken a trade like this? No, because I don't trade this coin. I don't trade altcoins really. If I'm going to put on a trade, it's going to be like in Bitcoin or something like that. So, but that would be your signal, and at least you can measure risk from there. And there's no way to know that you're going to get a vertical candle like this, but at least your risk is measured, and now you have to see what it does. Now, if you're in such a trade and it goes vertical like that, great. Let it run until it does something otherwise, until it shows you a reason to sell, which can develop tomorrow. So I hope that answers your question. Good question about that one. Okay, no problem. Let me see what else we got here. Kim. Hey, Kim. Let's see what we got. CRSP. I know this is a popular one with Andrew, right? These are one of those gene biotech stocks, I believe, right? Therapeutics. So here we go. Support. This is an attractive location, right? That was almost a Seinfeld. That was almost a Seinfeld impression. This is an attractive location, and the problem with it is you have no candlesticks with you. Also, structure's working against you a little bit. So this could be a double bottom developing. Definitely one for the radar, okay? Good location. But as far as stepping in front of something like this, very risky. There's no reason to buy this right now. And it's better to give up the better price for a better environment. I talk about that a lot too. Right now, you can buy this thing right at the low. All right, that's a good price. And you say, well, why should I have to wait until this thing breaks the high of, what is that, 120.85? Why should I buy it up here when I can buy it now at a cheaper price? Because waiting for the reversal means that the environment is more in your favor and momentum is likely to follow through. That's what you want, momentum. So the price itself, when you try to get the best prices, it's a very expensive process, and usually you can lose a lot of money trying to do that because you're working against the momentum. The reason why the price is so good and the price keeps getting better and better is because the momentum is working against you, right, in these type of situations. So yeah, I like the location. I would wait for some type of reversal, a bullish pin bar, right? Something like this with a tail on the bottom. It doesn't matter if the candle is red or green. You want a long tail on the bottom is what you want. Look at these long tails over here. So you want something like that here. You don't want a long tail on the top, especially going into support. So I would just wait for that. And if you get the reversal, you can measure your risk off of that. And then from there, you want to see the next leg where it can go. I would not be overly optimistic and expect something like this, which is what, 139.61, but you need to be able to justify your risk. If you can justify your risk by getting out somewhere near the middle or getting out of most of your position, right? Maybe not all of it, but most of it, and you're greater than 1-to-1, then that's a trade worth taking, okay? And then you try to hold on to some to see if it can push that high. But you don't want to be unreasonable in this environment, especially with the general market has been in a tough spot. Now, again, these are biotechs, so they tend to do their own thing. So you have that going for you. All right, so just a few things to consider. I hope you find that helpful. All right, let's see what else we got. Okay, so I'm reading the next question. Ramana, can you please look at ADA, BTC, resistance levels? All right, so I'll take a look at that. Again, for those of you that don't know, I don't like these cross pairs. Now, obviously, ADA is moving faster than Bitcoin, and that's why it's looking like this. It looks very similar to the ADA chart, actually. And it cleared this area right here. Okay, but it's still kind of generally in that area. I don't like, I mean, what are you going to do with that? I wouldn't buy this now against I wouldn't use my Bitcoin to buy ADA now. You're in the same situation as buying against the dollar, right? Or stable coin. So you're looking at support right here, which is, what is that? That is 0.0004208 Bitcoin, right? Basically that area right there is where you want to, if you can get a pullback to something like that, that would be your technical level. But like I said, I don't like these cross pairs. The charts are not very reliable, and you know, because they're basically a derivative of the two coins. So one has to move faster than the other. But as far as support and resistance goes, yeah, you've cleared this resistance barely, and there's good chance that it turns. But look, if ADA turns on, if Bitcoin turns around, which it's in a likely area to do, and ADA turns around also, and ADA turns around faster, you're just going to see the same chart just go lower, right? Because it's going lower faster than Bitcoin. So just something to keep an eye on there. I hope that helps. Again, I don't like these crosspair charts. It's like looking at a Forex crosspair. Unless it's a stable coin that you're comparing against, the charts are not very reliable in my opinion. So thanks for asking. Andre, we have a U coming from the all-time high. Okay. Yes, pump and dumps. Right. Okay. Right. So, and Andre's mentioned it here again. This is very common with these coins. Don't get sucked up into that. Why? You know, I watch some of these fake gurus because I want to see why they get so many views. And I'm expecting when I watch someone that's got, you know, 2,000 people watching them on a live stream, or they're getting 50,000 views on their videos, I'm expecting some good content. And instead, what I get is a lot of hope and a lot of hype and a lot of emotional appeal. That's why they get so many people that like to watch them, because when people are in a position or they're stuck in a position or whatever it is, they want information that's going to make them feel better. They don't want to hear reality. They just want something that makes them feel better. Whether it works out or not is irrelevant. They just want that momentary feeling of, oh, okay, I'm on the right side, right? They want that hope. That's what these guys sell, most of them. Right? And then but I have my community online, and I have my training program, and I have my blah, 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 and blah, 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 right? And that's that story. Anyway, okay, so I hope that helps. Andre, I'm long from 1.1 on ADA, but I won't sell yet. Okay, hey, you know what, Andre? I mean, back to the ADA chart. If you're long there's no reason to sell. There's no reason to. If you're long from a good price, the thing is vertical. All I'm telling people is not to buy it here. Okay, you'd be nuts to buy it. But if you're in it, you're doing good. Let it ride. Let this thing ride until you get a reason to sell. Now, one thing you should consider, and I always tell people, if it's vertical like this, it doesn't hurt to take something off the table while you can, because I mean, look at this level, right? I mean, look where you are. It's not a bad idea. Maybe you take 20% of your position off or something. I mean, typically when we send out swing trades, if you notice, we have 3 profit targets, right? So what are we doing? We're taking 30% or 33% of our position off at each target, basically. So that's, keep that in mind. Don't try to top ticket with your full position. That's just greed, and often it doesn't work out well. Maybe, you get that one home run, but trying to get that one home run is a very costly exercise. Okay? So I hope that helps. Thanks for mentioning the scammer. Oh, here he is, the scammer. Please don't scam me, the scammer. I'm okay. Would you mind chart of SOL? Sure, let's take a look. SOL, USDT, the scammer. Wow, this thing is still vertical. Let's see. I know a lot of people were asking about this earlier in the week. So let's zoom out a bit and see where we are, right? I mean, look at this. First of all, not a good place to be buying, right? I just went over all that, right? Buying the highs, not a good place to be buying. Imagine the people that bought it right up here at the very top, and now they're like, I hope it goes higher. Let me watch my fake guru, and he'll give me some hope so I can stay in this position. Now you have an inside bar, an inside doji. See that right there? Inside bar. So it's indecisive. At this point, if you're in something like this, hopefully you've locked in profit. Now, you've locked in some profit. Is there a sell signal here? This is not a sell signal yet. A sell signal would be a break of this inside bar low, which is 68.24, basically 68 and a quarter right there. That would be a technical sell signal. Now, how low it goes after that, there's no way to know. Support, if you want to know where the support is, right? The support is all the way over here, which is this level, which is what? $44, but basically 44 area. That's your support. That's a long ways from where we are now. Maybe it finds support sooner. Well, you have this area here too. What is this? 58. Okay, so we can make an argument for that. You have some support around there as well. Those are the levels you're looking for if you're interested in looking to get involved after a retrace of some kind. But a sell signal could take you there, or a sell signal may find support sooner on its own, right? And we see that a lot. Like Bitcoin just recently put in that reversal at 45 or 44 or whatever. Thing refuses to go back to 42 where the support is. All right, well, you have to make an adjustment or whatever and be willing to take the new risk. But in this situation, again, those are your supports. So if you're in this at this moment, I would just wait, because you can also get a buy signal if the inside bar high is taken out. That could turn into another buy signal. So why not lock in some profit and see if you get the buy signal tomorrow? All right. The sell signal, just to be clear, doesn't mean to go short. It just means that the momentum is changing, right? And there's more selling activity coming in. That's all that means. And there's no way to know how far it will go. So you can't get opinionated on that stuff. This chart is clearly strong. Can't argue with that. And it's obviously doing its own thing. Could be based on hype, whatever it is. But putting on new risk, even if you get the buy signal up in this area, putting on new risk is highly risky, because you have to define your risk by that 58 level, okay? So if you're buying this thing at 72-ish or 69 or whatever, you're going to hold this thing all the way to, you're going to hold 10 points against you, and that's where support should appear. It may not. So, that's where your stop should be, somewhere below that, right? So that's a lot of risk. So that's why buying at these current levels is a bad idea. If you're on smaller time frames, you can work with this current inside bar low, but I'm not going to get into that because I'm not talking about day trades here. Anyway, I would suggest you have some years of experience before even doing something like that. Okay, Jimmy ordered appreciate that, Jimmy. Since you mentioned the ebook, I just want to mention too, because some people may not be familiar. It's all in the links in the descriptive portion of this video. But I wrote that ebook basically to put together the techniques that I use where I extract information like I'm using on these videos here to get a sense of context. Now, each item in the book, each item in the ebook, you can Google it, right? And you can get all types of free information on your own. But what the ebook does is it helps to put it all together in some sort of coherent format. Because sure, you could learn about Elliott wave, you could learn about support and resistance lines, and you could learn about, whatever, trend lines. But when you try to learn about these things on their own, it can be very confusing, especially Elliott wave. So the point of my ebook was I wanted to put together a collection of techniques that offer some, that you can pull from any chart that offer some true actionable value, right? As opposed to having a chart with 5 oscillators on it and trend lines all over the place, which is nothing but nonsense and noise. So less is more in this game. Anyway, so that was the objective when I wrote that ebook. I just want to make sure that that's clear. And thank you again for buying it. I appreciate that. All right, Andre was talking about, okay. Alex, no problem. Ramana, I only bring up a chart constantly because you actually picked the bottom a few weeks ago. Oh, okay. Well, I appreciate that, Ramana. I didn't pick the bottom on purpose. I'm looking at levels, and I just don't like those cross pairs, like I said, because those charts are less reliable. Okay, just from my experience, I prefer something against like a stable coin. Doesn't mean they won't work. You just have to understand the limitations. That's all. And if you're okay with that, then that's fine. Andre, thank you. Your insights. Okay, cool. I appreciate that. I'm glad people are gaining something from this. All right, so I got a couple more minutes because I'm going to wrap this up slightly earlier today. So do I have any more questions about any charts, any markets you'd like to see? I know I answered the questions from the chat room earlier. Some people had some questions in the chat room here, like Bitcoin. We'll close the session out here with strong Bitcoin here. So I just want to leave you with some thoughts. Again, this game, more than anything else, I may sound harsh at times, but I'm just trying to make some points. I may sound dramatic at times, but the points that I want to convey are this game is more of a mind game than anything else. Oh, VET. Okay, yeah, I'll take a look at VET. All right, before I go into my closing rant, sure, let's take a look at VET USD. So, okay, again, VeChain is a follower. It's not a leader. It looks similar to Bitcoin. You have this, there is a buy signal in here, is there? No, almost. Once this high is taken out, yesterday's high, which is 12.1284, when that's taken out, you have a buy signal. But again, it's following Bitcoin, right? This level up here, just like ADA, I mean, does this not look similar to that ADA situation or Bitcoin with 50K? It's all the same. This risk area is the same across the entire space. So the question is, can it clear it? And if it clears it, okay, great. So if you're taking the risk now, you're betting that price will clear it. And if it can, that's a great trade. If it can't clear it, that's when you have to figure out what to do. Now, your risk is basically, we can say 11 even, okay? You can define your risk from there. So you're looking at like what, basically $0.015 of risk or something like that. So again, if you're throwing around some serious money and something like that, I mean, that can add up if you have a large position. I mean, who's going to play $100? Who's going to throw $100 into this and take a half a cent of risk? I mean, it doesn't really make much sense. So my point is this, your risk is defined from there. If price fails somewhere in this area, which is very possible, if it fails and cannot break this, you're looking at a break of this support next, right? This area right there. You're looking at a break of that. That's where you have to make an important decision if you're in it. unload some. Also depends on your outlook. Is it a swing trade? Is it an investment, right? Because if it breaks that support, you're looking back at this area. And this area over here, right, which is what? Not basically 90, the 9 cent, we'll just round that to 9 cents, right, in that area there. That coincides with 35K on Bitcoin, because it's the same type of pattern, same type of situation. Now, if Bitcoin goes back to 35K, then you're likely to see this support tested again on this coin, okay? If Bitcoin does not go back to 35K, then it will probably find support at a higher level. Use the Bitcoin levels as your guide, all right? So I hope that helps. But again, the general risk on these things is the same. You have to decide if that risk is acceptable or not, all right? So back to Bitcoin. So again, I want to leave you with this. This game is about the mindset. When we first start out, when we all start out, we come into this game with the same type of situation. Maybe the account size may be different, right? One guy may have $1,000 in his account. Someone else may have $100,000 in their account. But that provides no advantage, right? Because we all come into this game with the same thing, a layer of emotions and a need to make money. Right? That's what we're all here, right? We're here to make money. And because we focus on that, that's the natural thing or intuitive thing to do. I need to make money. I can't lose money. I need pleasure. I need to avoid pain. These things are emotional, what do you call it? They're like emotional, I want to say like anchors or like polarizations. And we are all driven to seek pleasure and to avoid pain. That is wired into us. Now, in a physical environment, that works out well, because in a physical environment, you can touch something and it's there, right? Our senses help us. It's intuitive. If something is hot, we can feel it. If something is cold, we can feel that. If we see a light, we can react to it, okay? That type of stuff. If we see someone that's trying to, do something, we can make an observation and react. My point is, we react. We react naturally. Now, the market is not a physical environment. The market is an abstract environment. Not only is it abstract, but we cannot see the forces that are actually changing the price. Now, someone had sent me a question in an email, and I need to answer it. But I thought it was a very good question, because I think a lot of people can gain something from the answer. So I'm just going to say the answer here as well. And that is, his question was, what do I mean about when you can't see the real order book, right? Because I was criticizing Coinbase, and I was saying, yeah, the order book on there is complete garbage on Coinbase Pro. It's just a fake. It's just you're only seeing a small portion of it. You can't see the real order book. And his question is, what do I mean by that? It's an order book. You're seeing orders being matched. Right, but the thing is, it's useless because we can't see certain pieces of information that are resulting in those orders being matched, right? So you have to understand, there are people in the market, participants, big accounts, small accounts, smart money, dumb money, okay, money that's uninformed, reacting to stuff. Now, the smart money has better information typically, right? So they're not really reacting. They have better information. So they're going to maneuver and they're going to do things to try to get the uninformed money to react to stuff. That's the information I need to see in an order book. And no one's going to show me that information. Coinbase is not going to show it to me. Binance is not going to show it to me. They're just going to show me something that's going to stimulate my reactions, because it's better for them. They make money off the commissions, off of the fees, right? So they want stimulus. You ever see that Binance platform? It's like an exaggerated slot machine. It's horrible. And no wonder why no one makes any money. That thing's nuts. It's going to stimulate you to buy the next thing that moves, right? You don't need all that information. It's useless. So my point is this. We cannot see, when we look at a chart and everyone's focused, right? All these fakes on YouTube, and I really have to emphasize fake, because the stuff that they're proliferating is not actually helpful. When you look at this chart, all you see is a green candle. That's all you see. So you're assuming, oh, it's a green candle, so the next candle should be green too. But we cannot see what is ahead of the green candle. We can't see what types of orders are up there, and we don't know who's going to act at those prices. A large market order can come in, or a series of market orders can hold this price back in an area where that's likely to happen. So that's what you need to understand about a market. When you look at a chart, what you're seeing is history. Even this current open candle, you say, how's that history? It's still open because it's a result of orders that were matched a second ago, okay? These orders were matched, and we need to know what orders will be matched in the future, something a chart will not show you. So we have to guess. So my point is this. You cannot get sucked in to focusing or reacting to what you see. You need to be able to think ahead. You need to be able to look at a chart and understand what it is that you're looking at, what it means for the moment, but what is likely to happen next. And then does the chart confirm that, or does the chart do something else? We have to guess. As a retail trader with no inside information, which is what we are, we have to guess. And the only thing that keeps us going with that guessing, because we're going to be wrong a lot, is how we manage our risk. So, two things. Risk is the number one thing. Protecting your capital, always playing defense. That's number one. Forget about making money. Money will come as a result of managing risk. So that's my point. Because again, the questions that I'm seeing, like that guy again asking me about, what do I mean about the order book? That's what I mean. Like you go on Coinbase Pro and you're looking at this fake order book. Why is it fake? Again, you can't see who each account belongs to. You cannot see where his orders are placed, what type of market orders he's placing in the market right now. You can't see how much size he's got on his limit orders at different parts of the book. And you can't connect them to one account and say, oh, look, this guy here, he's got $10 million in this account, okay? And look where those limit orders are. This guy's selling all over the place. So that's a piece of valuable information that I can then, oh, well, if he's selling at these levels, most likely there may be others that are going to sell at those levels that are on his level, because those guys are smart money, okay? And they know something. They know something about something that we don't. And we have to assume that their information is good, right? That's all we can do. So I can't even see that type of information. I have to guess, right? So again, I said that whole rant was basically to just take your mind to help you focus on information that actually offers some real value and that you can make decisions off of that are relevant to the market, not opinions, not feelings, which is what most people do. All right, so the scammer. I know that you don't short BTC, but I took this short since RR looks reasonable to me here. Also potential, okay. All right, so the scammer is shorting Bitcoin. Now, the scammer, I have to say, it's a tough position. Now, if you're in that for a day trade, hey, you can grab something. You're looking at a smaller time frame. That's okay. You are at a resistance area here, okay? But if this thing keeps going, which is possible because you are fighting a higher low, that makes the short hard. I mean, if this was a stock or if this was something other than Bitcoin, I definitely wouldn't short that. All right, I'm just saying you shouldn't short it, but there's no short setup there. The short setup would be this thing gives you a bearish pin bar tomorrow, right? So you're in early, like the Nasdaq. The Nasdaq has been a real pain to short, and if you look at the price action in this thing, this piece of garbage market here, I mean, this thing's been a very hard thing to short. But if you wait for the red candles to start developing at a level, right? Look at this inside bar right here. That gave you something, not for long, but it gave you something, right? So like I said before, it's often better to give up the better prices for a better environment. All right, so I hope that helps. Oh, from British Columbia, Thorium, cool, thanks. All right, and thanks for participating. So everyone, okay, I'm going to leave you with that. I'm going to wrap this up now. I just wanted to give you that whole rant on mindset and limitations of charts, because again, you have to minimize your emotions in this game. We can't get rid of them completely because they're hardwired into us. You can't get rid of emotions when you have money on the line and all that stuff, right? That's not possible. But if you follow rules and you have certain objective ways to look at the market, then it's really about the market proving itself or not. So either it does this or it does that, and it becomes binary. And that takes a lot of the emotion away. On top of that, taking appropriate risks also minimizes the emotion. And when you have all that minimized, you're less likely to react. When you react, you are part of the herd. And when you're part of the herd, all you're doing is taking the risk off of the smart money's hands. Okay? You're going to most likely sell at the bottom and buy at the top. Even though you're trying to do the opposite of that, emotions will lead you to doing just that. Okay? On any time frame. So that's that. That's my rant. Okay, cool. Andre, thank you. I make it sound so simple. Really? I don't know. I mean, being simple is actually a very important part of this. And it's just a matter of, again, one way to simplify. And you mentioned the word simple. I just have to say this. When you simplify, it just means getting rid of all the junk that you don't need. And I'd say 99% of the stuff you look at is junk you don't need. Like if you watch news because it makes you feel better, you don't need it. So why watch it? Right? People criticize me all the time. Oh, why don't you watch news? You're not informed. You don't know what's going on. I don't need to know what's going on. If anything, the news plants seeds of opinions, and then I'm less likely, I may avoid an opportunity because the news put this idea in my head, right? Which I didn't want there to begin with. And if I didn't know about that idea, I would have taken the opportunity possibly. Okay, so all that stuff, get rid of the stuff you don't need. That's the point of my ebook. I want people to focus on just these simple pieces of information. When you put them together, it gives you context. And with context, that's the starting point, because now you have actual information that you can judge in an objective way. Okay, yeah, simple, but not easy though, right? But what makes it hard, like I said, anyone can read a chart. Anyone can read a chart. There's plenty of examples of that on YouTube. Anyone could be a stock market guru because there's plenty of examples of that too. All you have to know is how to say a few words: support, resistance, and oscillator. And now you're a stock market guru. Tons of them out there, right? But what makes this game hard is the psychology part, or the emotional part. And it's internal. It's what's going on in our mind. So that's the part that makes this such a hard game. And it all is rooted in fear. Fear of missing out and fear of losing, right? It's rooted in those two things. So if you can minimize those two things, you will perform better because you'll be able to make more objective choices. Okay, cool. All right, everyone. So I'm going to leave you with that. Thank you so much for your great compliments and for spending some time with me here today. I hope you all found this insightful and helpful in some way. I do stream on Mondays. I simulcast on TradingView and on here. And then we have our show when the other two guys can get to the show. We have our show on Wednesdays, where we also share some more of a fundamental and technical point of view. So you can check that out as well. It's here on the channel. Otherwise, check out the links in the descriptive portion of this video if you're more interested in Greenbridge. By the way, real quick, I just have to say something. You're taking a day trade in Ethereum 3150. Okay, hey, as long as you know it's a day trade and you know the reward risk to something like that, nothing wrong with it, right? If you know what you're doing with that. I just wanted to say that if you're interested in doing a free trial in Greenbridge, I say wait. Okay, you know, people don't listen to me anyway, and they still sign on, but wait like a few weeks. This is a slow period, and it's a hard period, and people come to our chat expecting lots of action, and there's no action. We don't force trades. So I don't want people to come to our chat and say, oh, this is boring, there's nothing going on. When many of our longtime members, they know what we can do when we have to do it. But we're very selective in periods like this because we're not going to put out trades just for the sake of putting out trades. A lot of guys do that because they know that's what people want. They don't care about the outcome of the trade. They just give you trades, okay? And we don't do that. So if you're going to do the free trial, wait like a few weeks. Wait until volume picks up in the market and there's more action. It'll give you a much better sense of our signal service and the kind of information that we put out. Okay, I have my moment on, and I will check out the ebook. Okay, cool, Andre. All right. So again, thank you, everyone, and wherever you are in the world, enjoy your evening or enjoy your day, and thank you so much for watching.